Welcome back, everyone. Today's starting to be a brutal day in the market. As you can see, S&P's down 1%. Started out much worse, so starting to come back up, which is a good sign. According to our plots here, we haven't quite reached the maximum oversold position for this month when the S&P is already starting to sell off. Towards the bottom here, you can see that there was maybe a buying opportunity, but once we get towards the top, it's kind of overvalued. So we're approaching that, and we've seen the S&P started to sell off, but now it's making a nice rebound. Hopefully that little trend continues. So today I'd like to go over some of the stuff we went over last time. How to build an algo. I realized it was a little bit rushed during the last class. So for this class, I wanted to take a little bit of a deeper dive in and see if we can understand this a little bit better. Okay. So I basically divide stocks into buy or sell, buying or selling opportunities, and it's based on things like the max, min, and the volume. So the idea is, if you get a big volume after a minimum, then it's probably a buying opportunity, and if you get a big volume after a maximum, well, the stock may be overvalued. And the idea is that a whale comes in, or maybe a shark, and they see that something's overvalued, then they sell a huge chunk of it. Or if something's a buying opportunity, they come in and buy a huge chunk. And after the whale comes in, we come in as scavengers and follow that trend. So how do you do that? Well, you can group the stocks and we can sort them, see if they're a buying opportunity or a selling opportunity. So we're going to pack a matrix such as this, and we're going to order them into buying or selling opportunity. So for example, here we have 1, 3, 2. It's a min, max, and a big volume. So 1 is the minimum, 3 is the maximum, and 2 is the big volume. And we can do that for every stock. So what we're looking at here is a min, max, and big volume. So how's a min defined? Well, it's the minimum of your Y. The Y is the market date of the stocks. We have a start time and an end time. Start time is, these are in seconds. It's about a week's worth of data. So we can look at the start time. December 5th. The end time should be today's date, the 12th. And then we can order such. So we're going to have the maximum, minimum, and the big volume. So it is going to be the maximum of Y, the minimum of Y, and the maximum of Z. So what is Y? Let's find out. It's just the market data. Let's see what our I is. I is 10,122. What is stocks? This. So I actually don't believe this is going to work. No, it gives it NA. That's just because this is a chunk of the code that's being ran. I pulled it out of a bigger section of code that's actually in my memory here in R, but that's okay. We'll try to make do here. So stocks basically is all the stocks we're looking at, and then we can choose a different one for I. We can define I as maybe 10. Try to run that again. There's our stock ticker. So we can get the market data for that. Let's try that. We're going to need a to and from. So let's just try to run this little section for the market data. You'll see I have a try catch here. That's it. It doesn't return anything. It's just going to basically return nothing. Not an error. It's not going to break the whole loop of code for giving an error. It's just going to ignore that error. Okay. So we're looking at the second value here. Let's see what we got. There's our market data. And as you can see, we wanted all the rows, column 2, which is going to be opening value. Let's try to run that again. Oop. That's okay. All rows, column 2. These are all of our opens. Okay, and then if we wanted the minimum, we would just basically put a minimum in front of that. And that's the minimum value. I don't see that value. Okay, well, oh, sorry. We omitted 32 rows. There's 32 more rows here. Okay, anyhow. So this is a minimum value. We can also do the same thing with maximum. If we wanted volume, it's going to be a different column. Volume is going to be in column 6. So we come up here. 1, 2, 3, 4, 5, 6. This is the volume column. So we can pick the maximum, minimum, and volume, and then we can order them. So we can put them in a matrix. This is mat 1. So we have in 1, 2, and 3. We have the order here. So row is going to be I in column 1. Then we're going to put the 1, 2, and 3 for max, min, and volume. So we got max, min, and volume. Same thing here. Second row, max, min, volume. We want to know what the order, how the order is. So remember the min, max, volume. Oh, sorry, I call it big volume because it's the maximum volume, 32. So when we order that, just putting them in order. One, two, three. Max, sorry, min, big volume, max, 1, 2, 3. Okay. So that seems to be working. And it's 1, 2, 3. sorry, yeah, that's just a coincidence. This is a different ticker that we're looking at, but it would read the same. Should it be the same ticker? Okay, so that's how we're ordering them, and we're going through line by line. We can get more into this, how to create a loop and fill a matrix and export the data, but for now, I just wanted to kind of break it down into more bare bones and sort of explain what's going on, the logic behind it. Once we get these grouped accordingly to what we're interested in, as I was saying earlier, to determine if things are buying opportunities or selling opportunities. Example, when a stock is down and you get a big volume, then signifies that shark sees value in it, and if the stock is reaching a max and a shark comes in and puts big volume in, well, that could be signifying that the stock will move down at this overvalue. That's just my theory anyhow. I will leave you to develop your own theories. This is just a class for our programming and reading in the market data to make your own assumptions. So please invest accordingly how you would want to invest your own money. This is mine, so I can do whatever I want with my own money, but for you, this is not stock advice. We're just teaching you how to read in market data and make your own assumptions. So a little bit of a disclaimer there. So I will not be held responsible in any case. So what we want to do next is count. Basically, we want to count how many are buys, how many are sells or buying opportunities, how many are overvalued selling opportunities. And then once we get that, basically every day I come in and plot, make a plot. So on this day, there are a lot of stocks that were a buying opportunity. A lot of more stocks had big volume after a minimum was reached. And then, for example, down here, more stocks had big volume after a maximum was reached. So, as you can see here, this is where we're at today, or yesterday rather, is we're starting to approach maybe a bit of a overbought situation, which maybe is indicative of the sell-off we had today. And if we were down here, it may be an opportunity to buy. And this is just counting the buying opportunities and selling opportunities that were going over here, max, min, and big volume. So once we get a matrix like this, we can count basically which lines are what we're interested in. Is it a 1, 2, 3 or 1, 3, 2 or 2, 1, 3? And we do that with something like this. So expand this out a little bit. Okay, so to buy these and sell these. Okay, so the buy these are going to be defined as these here. Okay, so which mat 1 column 1 is equal to 2. Mat 1 column 2 is equal to a 1, and mat 1 column 3 is equal to 3. So we're looking at which of these are 2, 1, 3. 2, 1, 3. So 2, big volume, 1, minimum, and 3, maximum. So we're looking for a big volume before a minimum, and then we hit a maximum. That's what I'm defining as a buy. Also, which ones are 1, 2, 3. So 1 is minimum, 2 big volume, 3 maximum. Those minimum, big volume, maximum. So we hit a minimum, we get a big volume. So the big volume can be on either side of the minimum. We're getting big volume before a minimum, big volume after a minimum. But regardless, big volumes close to the minimum, then we hit a maximum. Okay, so these are the buying opportunities. We count these, and then we plot them in this plot. So to sell these are going to be 2, 3, 1. So 2 is big volume, maximum, then minimum, and also 3, 2, 1, maximum, big volume, minimum. So I'm just looking here. I don't have them in order, but I have 2, 3, 1. 2 is big volume, 3 is maximum, 1 is minimum. So those those are the sell. So we can add up the buy and the sell. We can make a ratio, and the ratio is defined here in this one. So as we approach the top, we're oversold. As we get to the bottom, we have buying opportunity. Okay. So then we put these into buy these and sell these. So let's just see what that looks like. Okay, so as you can see, there's a lot more buy these and sell these. So we would do this over and over and over and over again to get a statistically significant value. And if there are more that are in the buy these category than the sell these, that can really mean one of two things. Either we're approaching oversold, or that the stock market is just doing that awesome and it's going to keep going up. Your call to make that choice yourself where you think it is. So once again, realize that you only realize your losses once you sell the stock. So if you're not in there buying and trading and doing things of this nature, then if you just hold your stock, then it'll have swings up and down. But once you sell, when it's down, then you've realized your losses. Same holds true, vice versa. So that's basically it. Let's see if there's anything else I wanted to show you. So we're looking at a loop here for K and 1 through length. Sell these. We're going to sleep a little bit to slow down the code to register. Yeah, that's kind of what I wanted to show you, how to define an algorithm. We have start and stop time for the market data that we're collecting. We defined our stocks with a bunch of different tickers. This is a sample. A sampling, we're taking maybe 100 different samplings of the data. Just for instance, if we wanted to see how many stocks we're looking at, we're looking at about somewhere in the 1400s, 1420, 1, 2, 3, 4, 5, 1425 stocks. But then again, we're only taking a sample of 10 at a time. there is a limit in Alpaca how many stocks you can look at in a certain amount of time with the free account. If you have the paid account, I think it's unlimited. Or if there is a limit, is way more than the free account. But that's okay. Just take in a few at a time and do some statistics on that by repeating it over and over again, having slight delays in the time that we're calling this information. And if you wanted to start the algorithm at a certain time, we can go over this next time, when to actually start the algorithm, because it takes a while to run. But I think we've covered pretty much what I wanted to go over for how to define an algorithm and what that means. So it's just a continuation of the last class. So with that, I think I'll stop here and develop the next class and see where we want to take it. Let me know in the comments if there's anything you want to cover or for me to go over again, something that's not clear.